Are you buying US stocks right now? Are you loaded up in stocks in the NASDAQ, in the Dow and the S&P 500? I think it could be a good idea if you just watch this video. I would say be very much aware. Of course, this video is an expression of my opinions, so it's not financial advice. You should do your own due diligence, but maybe it's a good investment to look at this. First of all, here we have the Dow Jones Index. I did a short video not too long ago where I kind of warned about the possibility of a head shoulder. You could say with this formation that is currently here that it has been negated, even though this is the Friday of the week and it's still not closed yet. But what's interesting here is that if I draw a trend line to connect these two highs here, you can see almost that price is actually going all the way down, maybe to finish underneath this trend line. This could also be a small fake out where it goes over the trend line and then goes down immediately after. The point I'm trying to make is, look at this candle. This whole candle has been way outside the Bollinger Band. I know the Bollinger Band expands, subtracts, but it's been way outside the Bollinger Band the whole week and is now always almost back to start. So what we're looking here is technically a tail bar. You can call it shooting star, you can call it whatever you want. Somebody calls it torpedo. It's pointing downwards. And it's, as I told you, the whole candle has been outside the Bollinger Band. So even here, you can see that when this happens, the market tends to go back into the Bollinger Band. Like here, you have a rise outside and then goes back. Here again, rise outside, goes back, right outside, goes back. So the point I'm making here is that there's a very good chance that the market is going to stay underneath this line, or at least go back again. And if it goes back, it starts to turn red. That means if red takes out this green, we are looking at least at a drop all the way down to the 20 moving average, which is about 3.2%, or even further down to the closest support area here, which should be 5%, or even further down here at 7.7%. So a possible drop of 5% in the Dow Jones is not unrealistic. And here comes the good part. If you look at the NASDAQ, you can see here, the NASDAQ has technically already made the turning signal. I don't even remember what it's called, but this is a turning signal for the NASDAQ on the weekly basis. And also if you measure the NASDAQ from where it is right now down to the 20 moving average, you're looking at minus 5%. So, and you can see as long as red takes out green here and there's no green taking out this red, it's going to continue with red for sure. And also here on the S&P 500, you can also see here you have technically this bar here was very high outside the Bollinger Band, and you have almost 5 weeks in a row with only green after support of the 20 moving average. But now you have a red bar taking out the green one. And as long as it closes underneath the green one, this is a selling signal. Of course, there could be a small reaction on Monday, Tuesday next week where it goes up a little bit and then it continues further down. And if it continues further down, we can measure the move down to the 20 moving average, and it says 4.5%. If you go down to last support, you're talking about 10%. Also, when you look at the S&P 500, here you can see that it has met a 100 years resistance line on the S&P 500. 100 years of data, that's a lot. So what I'm looking at here is that all of these three indices is showing weakness right now. The S&P 500, the NASDAQ, and also the Dow, even though the Dow looks a little bit different. That's why I say be very much aware of a possible drop of 5% in the market. Also, there's a technical chance, it's hard to predict, we shouldn't really predict, but there's a technical chance that this could actually even be the top of the bull run that we had since 2009. I mean, it's been many years since we had the last financial crisis. And yeah, we had some dips or some pullbacks, some retracement back in 2015. I think we had a little bit in 18. We had in 2021 with the COVID as well. And we have risen ever since. So, but let's see, this is the third quarter of 2024. It wouldn't surprise me that it is going to be this quarter that actually marks this place. But anyhow, I will be looking for the market to go down at least for the next couple of weeks. I already put in my shorts. I can show you more or less that in the NASDAQ, I put in my shorts around here where I'm marking here. And in the S&P 500, I also put in my shorts up around here. And I even put in some shorts in the Dow. The Dow was a bit too early here, and I closed them up here already, so now it's down back to where it was, but so it is. You can't win them all, but at least I'm letting my shorts run in the NASDAQ and in the S&P 500, and hopefully if they can go back down to the 20 moving average, it should produce quite a good profit. If you have other thoughts about the market, I would very much like for you guys to comment write in the comment section what you think. But this just serves as a warning, as I see it. This is a clear warning that the market should retrace some bit. Thank you for watching. Happy trading.